Oil prices, WTI crude $38.70 a barrel, Brent crude $40.96. I'm Sean Pruitt, president of Kingdom Exploration. If you are interested in oil and gas industry as an investor or you're in the business, please subscribe to my channel. The myth behind low oil prices is fueled by shale oil and gas because the minimum that oil prices need to be for a shale company to break even is $60 a barrel. Quite simply, to drill a shale well, and what shale is, it's the actual formation underneath the ground, okay? And it costs, the frack is very expensive to produce shale from oil. Simply, shale oil and gas is a very tight formation. The oil does not flow out of it naturally, so you got to use technology like a frack to stimulate it to get the oil to flow. Well, the problem is that you're going to spend more money to extract that oil than the value, okay? And you need minimum $60 a barrel just to break even. And as you can see, oil is at 40. And so the stock market, okay, the stock gets the most attention, okay? The news, the media outlets, it's all about stock, okay? That is the richest industry in the entire world, okay? Investments in the stock industry. And so that gets all the attention, okay? But the problem is that a stockbroker is not going to go out and drill a conventional oil well. A conventional oil well was profitable back when oil prices were $20 a barrel, okay? First time we hit $40 oil was in 2004. So that in order to believe that oil prices are low, you would have to believe that oil was not that profitable from 2004 to the 1800s when they drilled the first well. Absolutely not true. I remember when oil prices hit $40 a barrel first time in 2004, I was excited. We were chest bumping and phones were ringing off the hook. They're not low. The problem is shale has stolen the spotlight. Stock market can't invest in conventional wells because if you are going to invest in a stock, you're going to invest in British Petroleum, Pioneer, all the major oil and gas companies. You have to invest in shale oil and gas. Okay, so they can't invest in conventional, and that's all they're talking about. Okay, and so I want to just go over briefly some news here. Drilling executive oil prices could hit $70 a barrel this fall. WTI crude prices may be set for a 90% jump to $70 a barrel by fall as U.S. producers may have overcut production. Dan Ebhart, chief executive of Canary Drilling Services, told Marketers Insider this week. According to the manager of the drilling firm, U.S. oil companies have curtailed production too fast when prices collapse, setting the stage for a mini supply shock on the U.S. oil market. I completely agree with that. There is too much of a production cut. But the problem with that statement is you have Russia and Saudi Arabia that is balancing the market by curbing production. OPEC, OPEC plus. If you don't know what OPEC is, it's essentially Saudi Arabia and all the surrounding countries, and they have a meeting where they agree on certain things about the oil industry. And mainly, the only thing that we really hear about is curbing production. Okay, curbing production means if they're producing as OPEC, if they're producing let's say 60 million barrels a day of oil, they might drop it down to 50 because if there's not enough demand with how much supply is, it will cause oil prices to drop. And so if they curb the supply and balance it with the demand, then they could stabilize the oil markets, okay? And so right now their goal is to put shale out of business, and it's working. So to see a major spike in $100 oil, it would have to be a war or something major, okay, to happen, okay? Now, could this happen? Could Saudi Arabia and OPEC miss it and cause oil prices to go up? It could, or the only way I could see these prices going up is if they do enough damage to shale where they're like, okay, let's cause oil prices to spike again. That could happen too, okay? Because in order for Saudi Arabia, although they could profit at $5 oil because they're drilling conventional wells versus shale oil and gas. U.S. produces the most expensive barrel of oil, $60 a barrel. But even though Saudi Arabia is profitable at $5, $10 a barrel, they need $85 a barrel to balance their market, their country, to keep the lights on for their entire country. Russia needs a high price, and they're desperate for higher oil prices. Quite simply, they just passed a law to keep Putin in office, but he's got a lot of egg on his face because it's affecting the economy tremendously. British Petroleum to cut 10,000 jobs because of oil price crash. BP is cutting 10,000 jobs as it reels from a crash in oil prices and tries to pivot toward renewable energy. That is laughable. So first off, they had to get rid of 10,000 employees because oil prices are crashing. Well, it's because they invested in Shale. Okay, imagine Shale. Imagine you have $1 trillion asset on a shipment going overseas, and that shipment gets sunk to the bottom of the ocean, and then you spend $1.085 trillion to reel that asset from the bottom of the ground to the surface, so you could sell the gold in it. Well, that's a bad move. If you're spending more money than what it takes to recover that asset, that's a big loss. Well, they did a 10-year study on 35 shale companies, and they spent $85 billion more than what the asset was worth. Shale oil and gas is a big fat loser. Okay, and now they're companies like British Petroleum is cutting back tremendously. But what's interesting here is they're pivoting towards renewable energy. Renewable energy is a bigger scam than shale oil and gas. Okay. Now, I'm not saying that the shale companies are scam artists. I'm not saying that at all. Look, I think there was a time when shale was profitable. I think they put their best foot forward. They were honest and said, hey, we think we can make a lot of money, which a lot of people did make a lot of money when oil prices were over $100 a barrel, and they were drilling on premium acreage. But now the premium acreage is gone. So the shale wells are not as profitable. And on top of that, oil prices are $40 a barrel. So to go from $130 a barrel back in 2008 to $40, the shale is not profitable, but conventional is. And so I'm not saying they're scam artists, but I am saying that it's just not profitable and doesn't make sense to drill a shale. So these guys are doing whatever it takes to look good to their shareholders. Well, everybody has bought this big fat lie that renewable energy is going to replace fossil fuels. Now, that is all good. Honestly, if I truly believe that renewable energy was actually better than fossil fuels and more economical and profitable as far as an investment, I'd be putting on the green hat. Okay, I would be agreeing with the Democrats, agreeing with all the young college kids and all these protest anti-fossil fuels. I would be on board. In fact, I invested $60,000, in a green tech back in 2008 with an engineer out of Fountain Inn, South Carolina. He has a bunch of patents and anyways, we took it as far as Dr. Chu for Department of Energy. They earmarked us like $10 million to take the next step. Anyways, long story short, that all blew up. Okay, because it's a big fat lie. Okay. And so in my description, there is a link to a documentary that talks about this. Michael Moore made a documentary outlining why renewable energy is a big fat lie that the media, the Democrats, Wall Street has gotten behind. But it's a huge lie. It's a major facade. We have grown so quickly because of fossil fuels. The economy has exploded. The baby boom, the population growth massive. Because think about it, back in the day, before we had engines, before we had combustible energy, we were having to go out there with a rake and a hoe and farm. And we could only produce enough food for our family. Okay. Now we could produce with that same amount of people, because these massive tractors, we could produce enough food for thousands of people, okay, versus just our own family, okay? That caused population explosion. That caused cities to grow. That caused countries to explode. Okay. And now with that massive growth we got up to 100 million barrels a day, 100 million barrels a day of consumption, because we need that just to be able to drive and to be able to build infrastructure, to be able to build houses, all the byproducts of plastics, everything that's plastic comes from oil. In order just to maintain that, we need 100 million barrels a day, okay? Now, that has dropped down to 80 million due to COVID-19, but it's growing every day. It's coming back quickly. And so you can't replace that with renewable energy. You can't replace that with wind. You can't replace that with solar power. In order to replace what we've done with fossil fuels, you would have to cover, with solar power panels, you would have to cover 25% of our Earth's planet with solar power panels in order to replace what fossil fuels has done, okay? It is impossible to have 100% green technology. If you look at my description, there's a link to a documentary that was done that's been taken out because there's an agenda to destroy it, because the world does not want the truth out there. And because of a frivolous copyright claim, their video was shut down. And so in the description below, you could watch it. And so, but because of all of this, the Democrats are anti-oil. Wall Street is anti-oil because of Shale and the big fat loss. All the elites are anti-oil. You've got all of the media is anti-oil. There's a major agenda against oil right now, and they're propping up renewable energy. Guys, you can't replace it with renewable energy. So what's going to happen because of that? Well, production is being destroyed. Okay, the shale oil and gas industry is done, and it's a slow death. We've dropped 2 million barrels a day of production from shale oil and gas. We've lost 2 years of work in a 2-month period because of the anti-negative sentiment behind oil and gas. The production is going to be destroyed because financing for oil and gas is completely gone right now. And that's why you have companies like British Petroleum and different major oil and gas companies saying, hey, we're looking into renewable energy. We're backing renewable energy. That's why you see these automakers going into renewable energy, even though they're cars. I mean, in order to charge your vehicle, you're having to plug it into the grid, which the grid is powered by what? Fossil fuels. It's not powered by wind. And if you believe that, you need to watch the documentary in the description below. And so, Sean, how does that help us out? How does that help you? Well, first off, I'm still developing in conventional oil plays. Conventional oil plays, a shale well costs like $20 million versus a conventional oil well costs $600,000. Okay, that's number one. It's a lot cheaper to produce a barrel of oil. Number two, we're able to get into leases that we would never be able to get into because the competition is being destroyed. And all these conventional guys, they know the truth. They know that right now is the time to invest. But the problem is these conventional guys cannot get money. I'm one of the few conventional guys that is still able to raise capital during this time. Okay, and because of that, we're able to take the low-hanging fruit. We're getting into leases where we're surrounded by wells that produce over 100 barrels a day. If you could drill a well for $600,000 and produce 100 barrels a day, that's an incredible deal. Now, there's no guarantees in this business, okay? We just drilled 2 successful wells, but even before we drilled it, there was no guarantee that we were going to hit successfully. But we have a geologist that has a track record in the same county that has hit 90% of his wells. So we're having a tremendous amount of success. The risk is much lower when you develop in areas where you're surrounded by success. You got all the geology, all the engineering. You take every well log from every well and you study it. It lowers your odds of missing. But so yeah, we're having fun right now. This is the most exciting time for the oil and gas conventional side, and the Russia and Saudi Arabia, they're going to play this game until Shale is gone. and they're going to manipulate prices until the shale oil and gas is gone. They don't have before. Saudi Arabia had every reason to work with America, because when Bush was in office, when all the way from Richard Nixon all the way to Obama, we had this agreement like, hey, if you sell your oil in U.S. currency, before U.S. the commodities like oil in every country was sold in their currency. You know, in Russia it'd be sold in the ruble, for instance. Well, now everything's sold in U.S. currency. Why? Because we made a deal with Saudi Arabia. At the time, they're the world's biggest oil exporter, okay? They were the oil source, okay? And we made a deal with them. We said, hey, look, if you sell your oil in U.S. currency, we will protect your assets, okay? So they said, oh, of course. I mean, that makes sense. We'll get backed by the most powerful military in the world. And then we get to sell it in the most stable currency in the world. And so that's why our currency is one of the most powerful currencies in the world. Everyone sells commodities in U.S. currency. It gets priced in that. But now Trump is pulling out. Trump is pulling our military out of Saudi Arabia. Now they're sitting ducks, and so that's why they're doing business with Russia. That's why they're trying to find new buyers, because America used to be the world's biggest importer. Well, now we don't need the oil anymore, okay? And so there's a lot going on there, and it's causing a tremendous amount of unrest in the Middle East. And Iran, they dropped a bomb on a key oil field in Saudi Arabia. But the reason why they could get away with that, because America is not as involved as they once were, and so they know they're sitting ducks. And so if they didn't have the plan to take out shale oil and gas, I believe you'd see much more going on in the Middle East. There'd be a lot more wars going on. But I believe that the only agreement that they have, the only reason why they're not going crazy in the Middle East right now is quite simply they're all in agreement. Let's take out shale oil and gas. Well, shale's getting taken out much faster, just like what this news article is talking about here. Shale is going out faster than expected. British Petroleum just laid off 10,000 people. There was another cut that size with another major oil and gas company. I feel really bad for you shale guys. If you're in the shale oil and gas industry, my heart goes out to you. I got a buddy of mine. He was an engineer for British Petroleum, and he's one of the head guys, and he's been out without work for a year. So my heart goes out to you guys. But the conventional oil and gas game is not roaring because most guys can't get money right now because all the lies that are going around. Okay, but we're able to get our wells funded, and we're very excited right now. This is a lot of fun. So if you're interested in looking at some of our deals, like I said, there's no guarantees in the oil and gas industry. But in the description below, there's a link to request information. I'm Sean Pruitt, President of Kingdom Exploration. If you like these videos, please subscribe. We'll talk soon. Thanks.